Hey, this is Jack from Alpha Charts with a long view video. Today is January 1st, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Thanks for watching. Again, follow me on Twitter at AlphaCharts365. Like and subscribe to this video, please. It really does help me out. I love to see people liking and subscribing to my video. Helps, I guess, with the algorithms on YouTube and whatever. If you're on Twitter, tweet, retweet this. This is the long view. What is the long view? Long view is monthly charts, right? We only get 12 of these a year. So we're lucky that this is a monthly chart. It's also yearly charts are out, right? Quarterly charts are out, right? Weekly charts are out. Like all these line up beautifully this year. So I think this video is really, really important. Again, we do not want to skip our monthly charts. All right, so let's get going here. Moving averages are the same I always use, except on the monthly time frame. Red is 200 month, 50 month is the blue, 23 month is the orange, and the 9-month is the green. Okay, we're going to go through all the indexes. We're going to go through all the sectors, and then we're going to go through the largest market cap names, and it's going to give us a better sense of market structure. All right. Let's get going. So here we go. SPX, right? And I'm going to show you this chart because, this is from, kind of, if you look here, this was 1932 bottom, 1942, 74, 82, 2009. And will or won't we hit this line again ever in our lives? I don't know, but I do think this is a pretty snazzy chart, so I show it quite often. Every time we're in a downtrend, and we are in a downtrend. All right, so right here we have the 2000 highs. This is the 2007 highs. And so it roughly coincides with this, 1560-ish or so. But we're nowhere near that. We're at 38.39 currently, but you can see major downtrend. I think this 50-month moving average at 35.88 is a really key level. You see that we have held there. When I say we, the market has held there in the past, and I think that is the point that has to hold. Obviously, that would mean that we would made a higher low and things could start to go up from there. If we take out the 50-month moving average, and chances are we'll be taking out this 34.88-ish area, right? What was the low there? 34.91. So we take out 34.91. We made a lower low, and this downtrend will continue. How low? We don't know. But could it get down here? Anything's possible. But basically, we are in a downtrend. There's no ifs, ands, or buts about that. Again, this is the area I'm watching. Obviously, this low right there. And then the 50-week, which is rising still. 50-month moving average, right? So that's SPX on the monthly. Dow Jones Industrial, DIA. It's obviously holding up much better than the others. We're going to zoom in to this most recent months. And you see the beautiful uptrend, and it kind of peaked here. It came down. There's your 50-month right there. It broke it, reclaimed it immediately, and now it is moving higher. And it's really not that far off from all-time highs, right? So Dow Jones Industrial is only 7% on the retracement, right? And going the other way, roughly 7%. Going up for the from all-time highs, right? So that's pretty amazing. And again, it's a good mix of defensive names and just major large cap names here. And it's pretty close, right? Nice little kind of double bottom look right there. There's your 50-month again held, and it's above all its moving averages. So Dow Jones is looking great, right? SPX. I'm sorry, we did SPX. NDX. So here's the NDX, and there's this kind of this trend channel, right? That's kind of been since 2010 lows, and in 2020, it popped above it, right? So there was a COVID low right there, and then you just took off with all the money that was flushing to the system, and now we're back within the channel. So price is below the 50-month moving average, and then you have this trend channel here around 10,450, we'll call it, right? Right around there. So price needs to stay in the trend channel. If we break below this trend channel, again, because it's held so many times in the past, things get pretty nasty pretty quickly, going back deeper. When you look at just the trend from the beginning, it's from 85. Here is the line from 85. That would be a real, we're talking about like a major problem if that happens. Kind of coincides with this general area of the top from 2000, right in this general area right there, around 5,100. Do I think it's going down there? Obviously, why would I think it's going down there at this point, right? We still have so many levels that would have to break for things to get back here. Is it possible? It is, and we'll know because this trend channel has to break first, right? And then we'll be a little more worried. With that being said, we're not quite there yet, right? Also have this 200-month moving average that would have to break. It's not that far though, from the trend channel, from the white line. But overall, NASDAQ looks really weak. It lost a 50-month. It's in a downtrend. So NASDAQ looks extremely weak. Mid caps, MDY, looks more like the Dow Jones Industrial, right? It's not that far from all-time highs. We have a beautiful uptrend. I guess it was created in 1995. Beautiful uptrend, and nothing has really, it's holding up well. This is the general area that has to hold, right? It's well above its 50-month, and when we kind of just zoom in on the more recent price action, it's I guess it's below these short-term moving averages, but the 50-month held right where it had to. Isn't that funny how it held 50-month? So that's an important moving average, right? It's important in SPX. NDX broke it, so that's a problem, but the MDY held it, which is great. And then the IWM broke the 50-month, has a head and shoulders on the shorter time frame, and if it does break below 164-ish, 163-ish on a closing basis, especially on a monthly closing basis, I think there's a good chance that we hit this 127, 128-ish area. No guarantees on anything, but that would be roughly, I would bet you that this rising 200-month moving average would be in there as well. And that would be pretty nasty, right? That would be another 22% to the downside. Is it possible, especially in the first part of the year? Of course, it's possible, but has it happened yet? No, it hasn't. So, but that's definitely an area that we got to watch. Right now, a reclaim of the 50-month would be the bullish scenario. A test or a breakdown from 163, 164 on a closing monthly basis would definitely be the bearish scenario. So overall, you have Dow Jones and you have the MDY that are looking okay, decent, but everything else, SPX, NDX, IWM, are all looking pretty rough. All right, let's see what sectors are holding up now. XLE. XLE is right near all-time highs on a monthly basis and looks extremely strong. Nothing bad going on here at this point, right? Pulled back a little bit, but it's still above all of its moving averages. Looks great. XLF. Again, this was the 2007 highs. Finally broke out of it over here, right? Tested 3 times, finally broke out, came back. This is just a normal retest. We're at, this level, but also the 50-month, which held. I think that's a really positive development that the 50-month held, right? And that's, again, what I'm watching for. This 50-month has to hold. So right now we're right at, we'll call it 31-ish for the 50-month. And that's your line in the sand for XLF. But overall, not looking terrible yet. 31 has to hold. Again, may move higher. Not that far from these all-time highs either, right? Yeah, so that's pretty good too. So XLF is looking pretty good. XLE, XLF looking good. Let's look at industrials. Industrials aren't that far from all-time highs, right? Pretty amazing, right? For as bad as the market looks, look how good some of these sector ETFs look. We're literally right near all-time highs. Has a little double bottom. Again, look what held, the 50-month, right? It violated it, came right back, looks great. So industrials are looking strong. So far, so good. Technology doesn't look good. But here's your blue line, your 50-month. Touched it back in October, bounced. That's positive. We have this general area that could be important. Right now, though, this 50-month at 116. So if technology can hold above 116, I think that that's definitely a huge positive, right? On a closing basis, we close below 116 and more importantly, 113. That would be really bad, and we may see that next leg down, which would be a significant leg down, right? That's nasty, man. Yeah, that'd be like that would be the start of, again, this was from 2000. That would be the start of potential really bad scenario. We don't know if that's going to happen or not, obviously, because, well, 116 hasn't broken, nor has 113. So we need those to hold up well. Okay. So XOK technology not looking good, but we have our levels. XOK, XLV right near all-time highs, right? It's not to like, looking great. XLV. Let's keep going. XLY. Lost the 50-day, lost this little intermediate area, and now this is the next huge level. If it loses 119, I think you easily get down to 81, 82, 85, somewhere around there. That would be really bad. So we have energy, financials, industrials, healthcare looking good so far. We have technology, and we have discretionaries not looking good, or maybe in trouble. So what does that tell you? Risk on, risk off, right? Our defensive areas are definitely leading the market currently. Our more speculative areas are not. That's XLY. XLC, communications, looks horrible. I mean, horrible. There's your 50-month right there. That's a VWAP, by the way. There's no 200-month. 50-month right there. Everything is crossing negative to below it. I wouldn't be shocked if we retest this 38, 39 area. Communications looks horrible. That's your Google. I think Google's in there. Meta's in there, which is Facebook, and Disney. I think those are the three biggest components, if I remember right. XLU, near all-time highs, right? Defensive sector. That makes sense. XLP, defensive sector, near all-time highs. Makes sense. XLD, materials, not too far from all-time highs, right? Not too far from all-time highs. There's your 50-month, which held, right? Look how important this 50-month is becoming in every single one of these charts. It held. We'll see if this will hold this here or not. There's a lot of like mining type stocks in materials. Gold miners are in there. Steel names are in there. Copper miners are in there. So a lot of material names are looking pretty good. Again, I would consider more of a defensive sector. And XLRE below the 50-month. This is really the important area, 35. So it's definitely tenuous at best. All right. So defensive sectors by far near all-time highs, leading. That's probably where we want to be. More speculative name sectors, not so much. Now let's go into the largest market cap. We're going to start with Apple, of course. And it looks like a big top that is starting to break down. So I think 108 is the area I'm watching for Apple. That's the 50-month, and that's about 16% lower. I wouldn't be shocked if we see that get pretty close to 109-ish. 20 points. It's a big deal, right? That's Apple. Not great. Microsoft. There is at 214. There's your 50-month is held so far. We'll see if it comes back and tries to take another stab at it or not. But again, as long as it's above the 50-month, I think that we're okay. A break of that 50-month, and I think there's a much bigger move to the downside coming. Right, that's a big move right there. That's what, 30% from the 50-month. Yeah, almost 40%. So this 50-month has to hold. Again, another Apple has to hold 50-month. Microsoft has to hold 50-month. Google lost the 50-month, and that's a problem. Big downtrend. We saw communication looks terrible. Google looks terrible as well. Makes sense. Amazon lost the 50-month way back here, right? Now reclaimed it, lost it here in September. And what a doggone breakdown that is. That's bad. And to the 200-month, that's 44%. I'm not saying that this is going to hold or not hold, or if it'll even test it. Maybe it goes down to 65, maybe it gets to 50-ish. I don't know. But that's looking really rough on Amazon right now. This is not a good look at all. Tesla lost a 50-month with conviction. That's not pretty at all either. It doesn't have a 200-month. It's too new of a name. But I mean, can Tesla go down to $24, $25? You bet it can. So if you're a holder of Tesla, look at this monthly chart, man, and say, if it goes down 25, am I okay with that? Because there's a chance it could. It lost its 50-day, and it's going to go through all this, and there may be some support along the way. It won't go straight down, most likely, but I think it could down to $25. Berkshire B looks pretty good, right? They do insurance companies. Insurance companies are looking good. Strong looking name. So it's our first one that actually looks strong is Berkshire Hathaway. United Healthcare, near all-time highs. Healthcare, again, we said healthcare was looking good, and United Healthcare is one of the biggest players in that field. Looks great. Johnson & Johnson, another healthcare name, near all-time highs. As expected, there's your 50-day. Everything's looking good. XOM, we said energy looked good. Look at this beautiful breakout. Come back, retested on the monthly, bought it back up. Things are moving higher. XOM looks fantastic. Very easy to manage risk on all time frames. So love that. It's XOM. Visa. I think it's actually a technology name, but obviously it's a financial name. So there's a lot of stuff going on with Visa. And let's look at this. Lost a 50-month. Next month came right back and reclaimed it. That's what you want to see. So far, so as long as it's above the 50-month, looking okay. Meta, we said it looks probably terrible, which it does, well below the 50-month. Again, doesn't have a 200-month because it's too new of a name, but just really rough looking name right there. Again, can it get down to $42, $43? Absolutely could, right? $50, somewhere on there. So just be careful if this is a name that you're in. Walmart, more of a defensive name, right? And look at this, holding up very, very well. Looks great. TSM, again, is all by market cap. So we lost a 50-day, reclaimed it, lost it again. Not the price action that you want to see, especially on a monthly chart, but it's below the 50-day. If it does not reclaim it, I think that obviously 61 is the first spot, and then potentially even 45, right? That's a big move lower for Taiwan Semi if it doesn't reclaim its 50-day very soon, next month. JP Morgan, financials were looking good. JP Morgan held the 50-day. Again, it did sink below it a little bit, but ripped right back higher. And so looking pretty good with it. Obviously, the insurance companies are looking better than the big banks, but it's above the 50-day. So that's what we know. Lilly, back to healthcare, probably, oops. And let me just get all this out there. We were in it before, and here we go. All right, so don't worry about that. Nothing to see there. Making all-time highs, obviously, are right near all-time highs, and healthcare looks amazing. Procter & Gamble, another defensive name, again, held the 50-day, moved higher, held where it had to. NVIDIA, my guess, look at this. kind of held what it had to, moved higher. So as long as it holds higher than the 50-day, we're good with that, right? We want to see this 128.50 hold in NVIDIA. That's a big deal right there. And even a bigger deal will be this 116, right? So there's two levels here that we're watching NVIDIA, but overall, happy to see the 50-day get reclaimed quickly. And last one is CVX, Chevron, near all-time highs. So energy names obviously doing good. So there you go. There's your monthly charts. There's the market structure. You can see energy, financial, industrial, healthcare, all looking pretty good. Staples, materials, all looking pretty good on the monthly area. And you tell that the, technology type names and discretionary type names, communications, all looking pretty rough. And then some of the largest market cap names, Apple, Microsoft, Google, Amazon, Tesla, those are some big heavy hitters. And if they have one or two more bad months, it's going to weigh on the market. Though under the surface, we'll be watching for what's holding up well. Because remember, if those stocks, the FANG name stocks fail, under the surface, there's a new group of stocks waiting to come up. Okay. So there you go. Monthly chart review. I still think it's a defensive market going into the 2023, at least probably for the next few months. I hope to do this every single month this year, and we'll be able to identify when market structure is starting to change at the earliest possible level. All right. Hope maybe this is a big bull flag, right? There's your 50 month. All right, guys, have a great day. Hope you enjoyed this. Give me a like, retweet, subscribe, all that stuff. Thank you.